Let's focus in on earnings and specifically let's talk about PNB Housing Finance. And this is a company that saw its net interest income declined by as much as 26% on a year-on-year basis in the Q3. You saw PAT coming in at 19% lower. And in fact, the NIMs have shrunk to 2.7%. You've had a worsening of the asset quality, 7.6% on the GNPA front. We've got the management joining in, Hardayal Prasad, who's the Managing Director and Chief Executive Officer of the company, joining in. Thank you so much for taking the time, sir. I'd like to start by asking about both the NII and the PAT. They've both taken a hit. Could you help us understand why that is and give a sense of the performance in the quarter gone by?
One of the major reasons for the net interest income decline is the derecognized pool that we have, which is the securitization book. That has impacted a reversal of the income of almost about 159 crores. Last year, the same pool, which was earlier securitized, had given us an advantage of about 120 crores because of the interest rate declines that were taking place last year. Now, these are two major reasons why the net interest income has come down. Another big reason is that we have had a depleting book on the corporate, which was decided, and it is a plan. So that was a high-yielding book, but there were issues with the corporate book, and the decline now of the corporate book has also resulted into the interest income coming down. I think that is one of the primary reasons why we are seeing a little lower net interest income.
Good morning, Mr. Prasad. This is Cheryl also joining in the conversation. On the asset quality front, your gross NPAs have actually inched up from 5.9% to 5.6% on a quarter-on-quarter basis. So could you help us understand the impact of the stress across the retail loans as well as the corporate book? And can we actually expect this sort of a stress to continue going ahead as well?
Well, one of the important things to understand is actually the increase in the NPA that you look at is because of the Reserve Bank of India new norms that have been implemented. And it is a reiteration of the norms that the Reserve Bank of India has set to bring parity with the banks in the way the recognition takes place. If you look at the net NPA from Q2 to Q3, it remains absolutely the same. There is no change. We were able to pull back a little bit of NPAs on the retail side, but the little improvement, little increase in the corporate book, so it is a flat. However, the impact has come only because of the Reserve Bank of India new norms, where they have said that if the account is once an NPA, it will always remain an NPA unless the whole irregularity is removed. Now, if the pure increase is purely because of that. Now, if you really look at the amount that we have given, 839 crore as a separate amount, which is NPA because of the Reserve Bank of India norms, out of that, almost about 790 crore is in the stage 2, which was always earlier being shown as a stage 2, and about 40 crore in stage 1. So if you compare apples and apples, the amount is the same. However, because of a depleting book that we have, the percentage has gone up. So I think the moment we have the growth story back, and it should happen, I think, in the next few quarters, you will find that the percentage decline is taking place. So I think that's one of the primary reasons why we are seeing that there is an increase in the percentage terms, but it is on a depleting book.
Mr. Prasad, let's talk about the loans then, and let's talk about the focus on Unnati AUM. What's the growth prospect in the affordable housing space, and where do you see growth coming from?
Last year in January, we had very clearly laid down that the company is going to focus on the retail segment. And within the retail segment, we had clearly laid out that we will be focusing on the Unnati segment, which is a segment which is loans up to 35 lakhs, which is a government push on the affordable housing and all that that is happening. We expect that this year also there may be major announcements in terms of the affordable housing that they're doing. What we have done is that we have created separate vertical to cater only to the affordable housing in the Unnati segment, which we call it. And the second is that we opened 13 branches last month. Now, these branches have stabilized, and from this month onward, they will start delivering on the numbers. We have also mapped almost about 14 states where we would like that, and especially 50 districts, very clearly, where we have started the dedicated sourcing of these books. The third thing is that during the course of this year, especially this financial year also, we will be opening another 25 branches only to cater to the Unnati segment. I think these are some of the steps that we, even if they are baby steps, they'll go a long way in terms of ensuring that the Unnati and the affordable piece is absolutely part of the DNA, and it grows significantly as we move forward.
Thank you, Mr. Prasad. We leave it at that. Thank you for joining us in the show and giving us a take on how PNB Housing Finance performed in the quarter gone by and what lies ahead for the company. That was Hardayal Prasad, MD and CEO of PNB Housing Finance. But on that note, we slip into a break.